Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, and in this video, you could say it's an educational video, but we are also trying to point at whether your favorite crypto coin or token is currently oversold or overbought. Why is that important? Because that will determine whether we are about to see some serious price drawbacks, and it might also point towards where we are within the wider bull cycle, the crypto cycle that is. But before we proceed with this video, guys, please know that I am not a financial advisor. If you do require financial advice, please approach someone who is actually trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and the content is also not targeting UK audiences for obvious reasons. The authorities do deem anything and everything crypto related to be extremely risky, and they're trying to protect UK audiences and users alike. That said, if you're from the rest of the world, guys, apart from doing your own research, please consider subscribing to our channel. Click like and subscribe, and from time to time, try and engage with us in the comment section. We'll try and respond to your questions or queries. So, how do we assess whether your favorite crypto token or coin is oversold or overbought, which may also impact prices in the short term to medium term? Well, in crypto market charts, we've got what's called RSI or Relative Strength Index, which is a momentum oscillator used to measure the speed and magnitude of price changes to identify overbought or oversold conditions in an asset. It generates a value between 0 and 100, where values above 70 often suggest an asset is overbought, and values below 30 suggest it's oversold. A rule of thumb, that is, it's not the norm, but it is rule of thumb. Looking at the current top cryptos and looking at the RSI chart at the time of recording, average crypto RSI is sitting at approximately 53.3, which is neutral to bullish. Share overbought versus oversold, you're looking at approximately 4.9% overbought versus 1.5 oversold. So, which means majority is in the middle, and the momentum trend is indicating that RSI has risen from approximately 45 a week or so ago from the time of recording to approximately 53% now, and a 30-day change from about 54%. Net momentum is recovering, but it's not euphoric, okay? So that is also going to indicate or point at where we are within this bull cycle, at what stage are we at. And if you look at the heat map at the time of recording, it clusters the largest caps like Bitcoin, Ethereum, BNB, Sol, XRP, and so forth, between roughly 50 to 65 RSI, with only a handful poking above 70 and almost none below 30 of the leading cryptos. What does that say? I mean, using this relative strength index thresholds of approximately 70 plus, which is overbought, and 30 or less, which is oversold, overbought or flirting with it, only a few large caps, like we said, sit near or above 70 on the heat map. The minority are consistent with the 4.9% figure. Expect this to be the higher beta names among the top cohort. Think of Link, AVAX, and Solana type runners when they are hot. Risk of short-term cooling is elevated here. Neutral to strong, which is 40 to 70. The majority of the top 15 or so, including e.t.c, Ethereum, and BNB, and several others, are mid-range. That's constructive in my view. Momentum is positive, but there's still room before classic overbought kicks in, which means from where we are, there's more room to run here before things actually overheat. Not financial advice, of course, just my own opinions, guys. Oversold, where we are looking at 30 or less on our relative strength index or RSI. None of the top 15 appear in the deep green or oversold band on the heat map at the moment, matching the tiny 1.5% market-wide reading. What this implies for buying? Well, if something is overbought, that is a value of 70 or above, the pros of buying here is that it confirms strong trends, breakouts can extend, but the disadvantage is that pullback risk rises, the higher the value goes up. Reward to risk worsens, consider scaling entries, waiting for RSI cool-offs to approximately 50 to 60, or buying higher lows rather than chasing spikes. As a tactic here that I'll personally apply, I'm thinking I'll buy into strength only with tight risk management or defined invalidation, if you know how to define invalidation, or wait for an RSI reset, for example, a dip to 40s and 50s on a 4-hour or daily timeframes. In neutral to strong, which is 45 to 65, the advantages of buying within that range is that it is often the sweet spot for trend continuation entries in a bull market. The disadvantage is that moves can still fail if there is no breadth, or if the breadth deteriorates. As a tactic, what I normally tend to do is that I add on dips towards RSIs of 45 to 55 in names showing higher highs and higher lows, avoiding adding the price makes lower highs while SI makes bearish divergence. Again, this might sound like Greek for those who don't speak Greek, of course. course. But believe me, some of these things are quite important. You don't have to be smart. You just need to follow some of these things. I mean, this is what the likes of Ray Dalio talks about when they're talking of principles. If you establish some principles on when you're going to buy into the RSI, what range and so forth, if you establish a principle along those lines, this could save your bags one day, if not all the time. Well, buying if oversold. Here we are talking of RSI value of 30 or less. The advantage of buying when it's oversold is that mean reversion bounces are likely. The disadvantage includes, if you're talking of in uptrends, top 15 rarely get deeply oversold. When they do, it's often during broader risk of or catching falling knives. So if you see the top 15 assets with an RSI of approximately 30 or less, it means you're probably heading to, if you are not already in a bear market or a serious bearish trend. My opinion, of course, I'm not saying this is expert advice. My tactic here will be I'll only nibble with clear levels and I'll be looking for RSIs that are greater than 30 to reclaim or price reclaim of a prior support. So you got to mix your RSI reading with supports and resistance levels. You need to consider that as well. And as for the overall bull market, what is the RSI suggesting here? I think a rising RSI averaging 45 to 53 week over week plus a small overbought minority and almost no oversold leaders indicates a market in mid-cycle advance or reaccumulation, not late stage blow off. So for those who are screaming, we've hit the top or no guys, I think we are in accumulation pending that blow off top. That's what I think because of where we are in terms of the timelines themselves. And I'm thinking breadth is supportive, leadership hasn't gone parabolic across the board, and dips are still getting bought, especially in mega caps. Think of your Bitcoin, your Solana, your Ethereum, your BNB, your Cardano, your XRP. All those things are still being bought each time there's a dip. So if and when overbought share balloons and average RSI persist in the higher 60s to 70s, that will scream late phase risk. For now, I would say it's constructively bullish with periodic shakeouts. So if you are being shaken out of your position and you are selling because that is your mental top, that is on you. It's not about the whole market. You need to develop some diamond hands, so they say. And always bear in mind that markets aren't overheated, just warm enough to toast bread. I'm talking of the current situation. For top 15 plays, chase only the truly strong with their seatbelt on. Stock entries in the RSI zone of 45 to 60 and save the heroics for out season because right now the bull looks fit, not feverish. Until the next one, guys, FD for seatbelt.tv signing out for now. Bye.